All right, good evening, everyone. Good evening, everyone. Welcome to tonight's webinar. I'm your host and MC, Brian, and I'm a senior dealer here at Philip Capital. Now, before we start, I'll just put out a poll right here to see if you can hear me and if you can see my screen. If you can see my screen, you can vote on the poll. I'll wait for a bit more people to vote and then I'll get straight into the event, yeah? All right, so most of you have voted. All right, thank you so much. Okay, so hey guys, all right, welcome to tonight's webinar. Before I get started to the core content and pass it to our esteemed speaker for tonight, I think I'll just bring you through a quick introduction to Flip Capital, as well as the products and services that we provide. All right, so this is just a disclaimer that the presentation has not been reviewed by the SC of Malaysia and is only provided for educational purposes only. It is not any advice to buy or sell any products. We are merely just providing you these services and these presentation to benefit you in your own trading journey, but understand that trading in itself is very risky. So if you are interested in trading or investing, definitely do seek out the help and advice of a licensed financial advisor. We are not liable for any investment decisions that you may make based on the content of this presentation. All right, so just a bit about Flip Capital is that we were incorporated in 1995, which is around 30 years ago, and we are a wholly owned subsidiary of Flip Capital Holdings Sundaram Berhad. Formerly, some of you may have known us as Flip Futures because back then we only offered futures and CFDs, but as of recent, for the past 2 years, we have actually acquired our stockbroking license. So we are now also offering our clients the ability to trade stocks. All right. We are a trading participant of Bursa Malaysia derivatives, as well as a participating org of Bursa Malaysia securities. But most importantly, we are also a holder of the Capital Markets Services License, which means we are legally allowed to provide you these products and these services. All right, we have around 11 Phillip Investor Centers, PICs, nationwide across Malaysia, with our headquarters located in Kuala Lumpur. So that means no matter where you are in Malaysia, be it West Malaysia or East Malaysia, you can visit any of our offices from Monday to Friday, 9 a.m. to 6 p.m. We have dealers there to assist you for any of the inquiries that you may have. Okay, so this is the beautiful track record that we've held throughout the years, right? All the way from 2018 till now. And just as of recent, we've actually won the best overall derivative trading participant for 2023, as well as awards in the best retail derivatives trading participant. So this just showcases to you that we provide exceptional services to our clients, and we want to thank you for allowing us the chance to even be able to win these awards in the first place. All right. So I hope you guys keep trading with us and we will assist you in any way possible. All right. So we are in 15 different countries. We have a wide global network from Asian countries such as Singapore and Malaysia, of course, Tokyo, all the way to Western countries like the US, the UK, Turkey, France. And essentially, what this means is that with this global presence, we actually have a global coverage. Yes, it means we are partnered with exchanges throughout the globe, such as the CME Group in the US. We have ICE in Europe, Eurex in ICE as well as Eurex. For Asian exchanges, we have Hong Kong, Tokyo, Bursa Malaysia, of course. So if you are a client of us or if you want to be one of our clients, any of the products listed here in these exchanges, you can trade them through us. Okay. So with that in mind, we think we are your one-stop solution for your trading. That's because first off, we offer a lot of products, right? All the way from futures such as index futures to metal futures like gold, all the way to good old stocks and equities like local Malaysian shares and also foreign US and Hong Kong shares to the good old contracts for difference, right? We offer local Bursa share CFDs as well as foreign NYSE and NASDAQ share CFDs and a bunch of other different things, okay? So with this in mind, not only have you won many awards throughout the past, we also do offer our clients 24-hour broking and execution support, as well as advisory services in the form of latest market news and updates by our dealers. And the most important thing, which a lot of people actually like, is that we actually offer not just a wide array of products at very cheap prices, but also we have no platform fees for our in-house platforms, right? You don't pay any hidden or extra costs for using these platforms. All right. So if you're interested in starting with Flip Capital, we do offer you free one-to-one coaching sessions. The first session would mainly be tied to an introduction to futures or CFDs or stock trading, which is the session for our product knowledge. The second one is for the charting system, where we bring you through a session for the platform coaching of our in-house platforms. Okay. Next up, we have the weekly market calls, where on the left you have the market views and updates every Monday at 11 a.m. by our research team. And on the right, you have the live counter technical analysis every Monday at 8 p.m. by our in-house technical analysts. And you can join all of these events right here, including this one right here with our speaker tonight, Mr. Derek. We offer you these free and insightful events right here from this QR code. You can scan it and then it will bring you to a portal on our website where you can get all the information of not just the upcoming, but also recordings on the previous webinars as well. All right. Next, if you are interested after hearing all of that, you can actually open an account with us online. We have an online account opening portal for all of our products all in one station. Right, you can open it just through this QR code right here. It's completely free of charge, and since it's online, you can do it at your own convenience. All right, let me bring you through our trading platforms real quick. First off, we have FlipNova, which is the platform that our clients use to trade local and foreign futures all in one platform. It is both on mobile on the Apple App Store and Google Play Store, and it's also on desktops and laptops as well. Now, the cool thing is that we actually do have an integration of TradingView. For those that don't know, TradingView is the world's largest social trading app. And we took the UI of the charts and then we slapped them onto our in-house trading platform, FlipNova. So that allows our clients a better and more intuitive charting experience. And we also have TradingView linkage, meaning you can trade on TradingView if you have an account with Flip Capital. Nice. Next up, we have our stock trading platform, Poems Global 3.0, which is also, once again, you can trade local and foreign shares all in one platform. It has multi-device support, meaning it is both on mobile, Apple, and Android on both of them. And also, we also have a desktop version as well. All right. Next up, we have Flip CFD Trader, which is the platform that our clients use to trade CFDs, both local and foreign CFDs, all in one platform. All right, next up, we have probably everyone's favorite part, promotions. Okay, the first one is actually you are able to trade US stocks at as low as 0.02% or a minimum fee of 1.99 USD. It runs all the way until the end of March, so you are still entitled for this promotion if you open an account with us right now. No platform fees, and you also get free US live market data with us. And if you are a complete beginner to trading, that's fine. You also get access to speakers like Derek. We have constant free webinars and also our weekly market calls. So if you're interested, definitely scan this QR code right here and it will bring you to a page on our official website, flip.com.my. It's one of the lowest rates in Malaysia at the moment, so definitely take advantage of this when you still can. All right, next up we have a companion. Sorry, this early bird entry is wrong. This is a bug. It's not supposed to be here, but this is the Flip Spike of Luck Amazing Giveaway Prizes, where all you have to do is just follow and win our social media page, running until the end of March as well, where you can get a chance to win an Apple AirPods, iPhones, iPads, and also an Apple Watch. And all you have to do is just scan this QR code right here and then fill in your entries, and then you will be entitled to these awards. You have a chance to get these awards and to win these prizes if luck is on your side. Okay. All right, next up we have the Trade BMD products and win, where you can win up to 350 ringgit in cash rewards as well as an iPhone 16 if you trade BMD, which is Bursa Malaysia futures products, running until the end of April this year. You can scan this QR code right here to get to know more about the promotion. All right, next we have the Trade COMEX 1 ounce gold futures at just 0.99 USD, which is your gateway to gold trading with greater flexibility and control, running until the middle of April of this year. Once again, this is a really flexible product. You can scan this QR code to know more about the advantages of trading such a small size contract. All right, last but not least, that's 5 promotions. This is the last one. We have a marketing representative incentive program where if you are an MR with us and you want to be one, you can share our US stock promotions with your family and friends. And then you can get 100 ringgit extra for every 10 activated accounts plus your original promotion. TNCs do apply and it runs until the end of March this year as well. So that's 5 total promotions. That's crazy. We want the best for our client, so definitely do take advantage of this once you still can, right? But if they're all over, we still have more promotions, so don't worry about that. All right, now let me introduce you to our esteemed speaker for tonight, Mr. Derek Tan, who is an active trader and investor all the way dating since 1999, specializing in fundamental, technical, and also psychoanalysis. He is the founder of Timing and You Proprietary Limited, where he uses psychoanalysis to guide investment decisions by identifying market patterns. Mr. Derrick has made several accurate predictions, including the 2015 lows in oil and gold, Brexit in 2016, and Bitcoin's bottom in 2017. He also predicted the 2018 US stock market correction, the 2019 gold rally, as well as, wow, the 2020 COVID-19 market crash. He now forecasts a final US stock market surge before a 2025 bear market. That's this year, so definitely do keep in mind, right? His proprietary Timing and You relative risk index assesses market risk and rewards, and he advises high net worth individuals across Southeast Asia. In 2019, he was named the World Excellent Young Leader by Yazhou Kan for his contributions to global asset strategies. That's a crazy, impressive portfolio, so I won't waste any more of your time. I will pass the floor to Mr. Derek Tan to present his part. All right, take it away, Derek.
All right. Thank you, Brian. So please allow me to share my screen. Just to check, are you all looking at my slides?
Yep, we can see it, no problem.
Okay, good. So good evening, ladies and gentlemen. Welcome to our this webinar on the 19th of February. The last time I actually did one with Philip was about a month ago on the 15th of January 2025. And wow, even though it's 1 month ago, a lot of things have happened during this past 1 month, right? So in January session, I did share some trading ideas. Then probably today, we can look back at some of the trading ideas as well as some new trading ideas that we can look at for the US stock market for this year. All right. So now,
Hi,
before I
Derek. Sorry to cut you
yes
off. Can you hide
yes
the notification at the yeah, thanks. At the bottom.
okay yeah can. So as usual, before I start, I would like to share this. Whatever I shared this evening is only my personal view, my personal opinion. All right, they are not recommendation to buy or sell any stocks or ETF or any asset classes. All right, if you need any advice or uh, please look for independent professional advice from probably professions from Philip that has a license to give you advice on any financial decision that you want to do. All right, so please take whatever I share tonight with a pinch of salt. You listen already, then please go and do your own research, then make an informed trading or investment decision. So please take note of that. All right. Now, whatever I'm going to share for tonight itself is pertaining to short to intermediate term. That means anything for less than 1 month to less than 1 year. All right. I'll probably focus more for this year, 2025, rather than go into 2026 or 2027. All right. Which I can tell you is not going to be pretty. 2026 and 2027 is not going to be pretty. So let's enjoy this party this year first. All right. So now, uh, ladies and gentlemen, let's look through this total return on S&P 500 since 1928 until last year. We can see that the last 2 years, in 2023, S&P 500 returned about 26.3%. 2024, it returned 25%. A very impressive return. Both year more than 20%. So are we going to have same kind of more than 20% kind of return for 2025? My take is I don't think so. All right. So I don't think we'll have a 20+% this year return this year. Why? Please allow me to share with you guys. All right. So for me, I have this thing called the timing and yield turn of the year indicators. That means I look at indicators. Can you see turn of the year, TOY? That means from probably Q4 of 2024 go into January, now into February of 2025. This turn of year indicator, based on my research, has tell me historically it can so-called forecast this coming 1 year with quite a fair bit of accuracy. So this is my own turn of the year indicator, and let me just share with you what's inside. All right. Within this TOY indicator, there are actually 5 sub-indicators. The first one is what we call the Santa Claus Rally. Short form is SCR. Second sub-indicator is January first 5-day indicator, which is FFR. The third indicator is January Barometer, which is JB in short form. The fourth sub-indicator is actually December Low Indicator. The fifth indicator is actually what I call the NJI, that means from the 19th of November till the 19th of January indicator. NJ is because November until January. That's why it's called NJI. I will go through each of them with you guys to let you have a gauge why I think we probably will not have a more than 20+% kind of return in S&P 500 this year. All right, the first one, the Santa Claus Rally, or in short form SCR. There's a saying, if Santa Claus should fail to call, bears may come to broad and war. Santa Claus Rally, which is the last 5 trading day of the previous year, which is 2024, and the first 2 trading days of the new year, which is January this year. All right, so this is SCR. The second indicator, which is FFD, is a January first 5-day indicator. The third one is actually the performance of the, for example, S&P 500 for the month of January. There's a saying, the Wall Street, as the S&P 500 goes in January, so does the year. So now, ladies and gentlemen, so for the Santa Claus Rally, unfortunately, for the last 5 days and the first 2 trading day of this year, it was negative. So for the FFD, lucky thing, it was positive. And luckily, we have a January parameter that is positive for this year, which was about 2.7%. So what does it tell us? This is the chart. These data I went through data in 1950s. Then before this year, there were actually 3 years whereby we have a down SCR. That means we have a negative Santa Claus Rally. We have a positive first 5 days, and we have a positive January Barometer. Or in 1967, 1980, and 1994. So this year, 2025, we have a negative 0.5 SCR, we have a 0.6 FFD, and we have a positive 2.7 for JB. All right, but let's look at the three year in 1967, 80, and 1994. Uh, what has happened during that period in February and the last 11 months and the full year? Based on this 3 year, all right, in terms of full years, the average return is about 20.1. All right, for the last 11 months was 11.4. If we look at the median, it's about 8.6 and 14.8. So based on the first three criteria of the Santa Claus rally, the first 5 days, as well as the January barometer, or if history were to repeat itself, or we may not have, like what I say, the kind of 20+% return like what happened in 2023 and 2024, if history were to repeat itself. All right. So now let's look at the fourth indicator called the December low indicator. What is this December low indicator? It means if the previous year December closing low of Dow Jones is taken out during the Q1 of the new year, then we got to watch out. All right. So now, ladies and gentlemen, last year, 2024, the December closing low was 42,326. Unfortunately, this year, ladies and gentlemen, this 42,326 was taken out in Q1. Actually, it's in January this year. Let's take a look. If we look at this chart, this red circle was a closing low in December for 2024, which is 42,326. And around 13th of January this year, we actually had a close below this 42,326. Can you see over here? So unfortunately, it has in so early of the year, because we can take it for one quarter, that means from January to March, but yet so early, around 13th of January, we already taken out the December closing low. So this is another negative sign that I see that probably we will not be have such a big return as what we had in 2023 and 2024. Then the last sub indicator, and we will look through history. If we look through history, this is a December low indicator throughout the years. All right, since 1928, we can see that when we have when the so-called in the Q1, whenever we have a closing low below the December closing low of the previous year, the average drop is about negative 10.9. 10.9. All right, so negative 10.9 at the bottom of this data over here. So, ladies and gentlemen, that's why I say we should be not be so optimistic that this year we will see more than 20+% again. All right, because of this. All right, so then the fifth indicator that I look at is the NJI. Because I realized after studying through a lot of data, I realized from the 19th of November until 19th of January, all right, so this turn of the year, it actually has a good forecast power of what is going to come for the next 1 year. All right, so from 19th of November 2024 until 19th of January 2025, the return of S&P 500 was actually 1.35. All right. So based on history, we can see that when the NGI is between 0 and 3, because it's 1.35, which is between 0 and 3, the average return for the next 1 year is about 6.1%. You see that? 6.1%, way lower than the 20+ year that we see in 2023 and 2024. That's why when I combine all this, I can tell you my T and Y turn of year indicator is telling me, well, we should not be too positive, too optimistic that we'll have another more than 20% kind of gain year. All right, so I'm not saying that straight away, no, we are going to a bear market. No, bear market, yes, it will come this year, but probably in the late second half of the year, not the first half. All right, so as this presentation, as I share more, I'll tell you where I think, how I think S&P will go, and when I think the bear market will come. But definitely, ladies and gentlemen, since the bear market ended in October 2022, all right, we have been having a bull market, right, until right now. Also, ultimately, in terms of cycles, the bull market has to end, which I think we probably will see the high towards the end of this year, all right, and then 2026 and 2027 are not going to be pretty. All right, so with this TNY turn of year indicator is telling me that we should not probably be too optimistic. We probably should look at uh, a return of S&P 500 probably less than 20%. How much? Later I'll share you guys. All right. So now another thing that is telling me to be not so optimistic is my TNY relative risk index, or in short form RRI. This is something that is so-called came out by me, is my timing and yield proprietary tool that based on my 26 years of trading and investing as experience, I put in about 47 sub indicators into this RI, which consists of technical analysis indicators, fundamental analysis indicators, as well as cycle analysis indicators. All right. Simply, I don't want to go into the details. Simply is when this black line here is actually my RI. All right. So is divided into 4 color zone: red color, orange, yellow, and green. So red color, as you all know, means danger. So it's something like driving a car. So that means when we drive a car, when we see red light, we will stop. All right. When we see green light, that means we are ready to go. So in technical term, we can say that when this my RI is into a red zone, that means we are in the danger zone. That means it's overbought. Or when our RI go into the green zone, that means technically we can say it's oversold, like what happened in 2008 during the global financial crisis. So ladies and gentlemen, for my red zone is between 70 to 100. So for the January reading is about 69.45. We are just tiny little bit away from the red color zone. So that's why, ladies and gentlemen, in terms of risk level, please take note, this RI is talking about the risk level of the US stock market. It's telling me that we are no longer at the low risk. We are probably heading towards the high risk. But do take note, if you look through historically, even though my RI go into the red zone, all right, it doesn't mean the stock market is going to crash. It's just that probably the risk level is high. We should not be so aggressive buying stock. You understand what I'm saying? All right. I just want to lay out what I think is going to happen. All right. So what I do think is we are now in the final leg of this bull market, or final leg. This final leg probably will run into the second half of this year. Then it will be thinking tong tong along the. Please understand this: topping of the market is a process. It doesn't mean it hit a peak then straight away it crashed. It doesn't work this way. All right, so probably we'll hit a high in the second half of this year. Then it will be a topping process before it turned down into a bear market stretching into 2026 and 2027. All right, so at this point of time, I don't think we need to panic yet because based on my RI, we are not into a red zone yet, even though we are near. Even though in going to red zone, it doesn't mean that surely the market will crash. Please take note, this is a monthly chart on my RI. It's not daily, it's or weekly, it's monthly. Also, but we are near to the red zone. So this is telling me that the risk level is not low, is high. All right, so we should not be aggressively buying stock. So, but wherever there's opportunity, I'll be selling some of my position to lighten up my portfolio. Also, that this is what I want to share with you guys. All right. So now this is a chart of S&P 500. Also, as you can see, as of last night, today a lot of so-called reports in the media that S&P 500 closed historical high. Yes, just a bit. All right. So uh, before I go on, I just want to mention this. I mean, for the charts that I'm going to share you guys tonight, uh, this red color line is actually the 200-day moving average. This orange line is actually the 100-day moving average. This blue line is actually the 50-day moving average. And the horizontal red line is the resistance line. And the horizontal blue lines are actually the support lines. All right, so now S&P 500 is challenging the high. All right, so because for me, like what Brian shared with you guys earlier, I myself do cycle analysis. All right, so we what I do see is we probably have a push of S&P 500 probably a bit higher, maybe to 6,002. Then after that, we probably have a correction in probably in March, April, or maybe back to the 100-day moving average, or even as low as the this upper blue horizontal support line. All right, so we may just break up, maybe a false break, and then it come back down. Okay, after the March April correction, then we will probably hit back up again. All right, going higher. All right, into this last leg of this bull market. Now, how high? I think S&P 500 will go. All right, so this is a monthly chart. This is a monthly chart of S&P 500. All right, so uh, from the high here was about 4818. The low here was about 3941. So if we take the depth of the high and the low, we can actually see that it actually S&P 500 formed a cup with handle before it broke up above 4,818 and it keep on going up. Do take note, this is a monthly chart. So the so-called the difference between 4818, that means the depth of this cup and handle chart pattern is about 1327. All right. So if we use the depth of this cup and handle, we project. That means we take 1327 plus 4818. We are looking at about 6150, which as of right now, S&P 500 is almost there. All right. So for me, S&P 500 has hit the price objective based on this depth of this cup and handle. All right, then if I were to use the Fibonacci extension of about 23.6%, we are looking at S&P. That means I take 1.236 times this depth here, then we add to 4818, we are looking at 6,005. So if you ask me, my personal take is after a correction probably in March and April, and the rally continue into a last day of the bull market, we may see S&P 500 rally to maybe 6,500, and that's about it. Like what I say, I don't see it go this year for S&P 500 to have another year of 20+%. All right, I don't think so. Maybe 10 to 15% max. So I'm actually looking at about 6,005. All right. So we are about 6,114 last night. Not too far away already. All right. That's why I say we're into a last leg. All right. Enjoy this last leg before we go into a bear market, probably towards the end of this year. All right. So now, probably let me share with you guys some of the theme that I think is going to be interesting for the rest of this bull market. Of course, one of the theme that I'm very positive about is AI, artificial intelligence, which I shared during my January webinar as well. So for those who didn't attend my January webinar, so I mentioned this AI is going to be a 15.7 trillion US dollar market by 2030. It's huge. Everyone is talking about it. Even Donald Trump, in the first month after he sworn in, he announced the Stargate project, remember? Which is about building AI infrastructure for OpenAI. OpenAI is the create ChatGPT. All right, so they are, that means SoftBank is going to work with OpenAI to build AI infrastructure. They are going to start off with 100 billion, and gradually within the next 5 years, they are going to increase it to 500 billion to build data centers. All right, infrastructure for AI. Also, one of the first project that Donald Trump announced is actually this Stargate project. Then only that, with the recent Q4 earning results from the hyperscalers, let's look at how the big techs bet on the AI. Orange is actually Amazon. Blue color bar is actually Meta, or formerly Facebook. The red color column is actually Alphabet or Google. The green color column is actually Microsoft. So ladies and gentlemen, look for 2025 or the Amazon. This is the actual and announced capital expenditure and investment plan as of February 2025, based on their earning. When they announce their earning, this is what they announce as well. So for 2025 forecast, Amazon is going to spend $105 billion on AI capital expenditure. Meta is about 65 billion. Alphabet about 70, 75. Microsoft is about 80. So you add together for this year itself, these four big techs, they are spending about 325 billion US dollar capital expenditure on AI. All right. So to me is, if they don't see a need, I don't think they will spend this kind of money. Also, they are betting big on AI again after last year and 2023. You see, and not only that, now even Europe is back and mean business in AI race. In the recent Artificial Action Summit in Paris, France President Macron say another 112.8 billion, you're putting 112.8 billion worth of investment into AI. So can you see this come after this law? The fall of big tech company planning to spend 325 billion to further strengthen their AI ambition in 2025. So ladies and gentlemen, so AI is here to stay, whether you and me like it or not. So my take is, please don't run away from AI. Embrace it. If you cannot start a business dealing with AI, then try to invest in stock or ETF that's AI related, so that somehow, apart from making you an AI in your daily life or in your work, all these things, you can also make money from this AI mega trend. That's my take. All right. So now, I think the easiest way to participate in the AI is a Magnificent Seven. This was what I shared the other time. All right. Which are the Magnificent Seven? Is these seven stocks: Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, and Tesla. All right. I know some of you guys probably have never invested in US stock market before. So for those who are new, this is probably something y'all can look at because you probably have used an Apple phone before, or you have most likely used Microsoft before, or you use Google to do Google search, or you bought something on Amazon, or probably your computer you use Nvidia GPU. And if you you use Facebook, that means you are using a product of Meta, or even you may even own a Tesla car, EV. All right, so this is, I think, a good way to start off in US stock market if you are new. All right, so now let's look at probably each of them. For Apple, let me just show you the chart that I showed in a January webinar. Or then we can see what has happened then and what probably may happen going forward. So this was a chart I showed in January, I mean about a month ago. Apple has corrected, and I say that hopefully this uptrending blue support line and the 100-day moving average hold. If it doesn't hold, we probably will see Apple coming down to find support over here at this support zone, and where its 200-day moving average is. So let's take a look what happened as of last night. Can you see? Apple did corrected. Can you see? It was here last month. It did corrected to this first upper blue horizontal line, and its RSI, relative strength index, did about reach the oversold level, which is about 30. And then can you see what a strong bounce? Came down again, it bounced back up again. So now, ladies and gentlemen, so my take is, if Apple can take out this resistance over here, this red horizontal line here, if we can take this out, we probably may see it go higher towards its historical high of $260 per share. Or for those who are new, ladies and gentlemen, you can actually buy one share in the US stock market. So based on last night, it's about 245 US dollar. So it's about probably 1,000 plus ringgit, one share of Apple, if you are interested in Apple. All right, so that's my take. The thing is, even with this rise, Apple has not gone in, I mean, its RSI has not gone into an overbought level yet. So let's see whether it can take out this lower rate horizontal resistance line over here. But can you see, when you're able to, it really bounce off this support line, which is around its 200-day moving average very nicely. So now it's coming back. I mean, other good news about Apple is it is now, China is a very big market, so it is now working with Alibaba, all right, to push out AI features in China itself. Also, this is something positive for Apple. All right. So next, let's look at Microsoft. So this was a chart I showed the other time in January. I mentioned that if this blue uptrending support line is taken out, we may see Microsoft coming down to this support zone around 400 to 405. All right, let's take a look. In fact, this is what has happened. It has came down, or it has come down to this support zone over here. All right, so probably Microsoft has not done as well as Apple. So it probably will hover around here, but it's not yet in the oversold region yet. That means not below 30. Unlike Apple, it's close to 30. That's why it has a strong bounce. Also, probably for Microsoft, it may ding ding dong dong around this level. All right, before it can go up from here. All right, so then next, let's look at Alphabet or Google. All right, so this was a chart I showed about a month ago. All right, so I mentioned that if Google were to weaken, it probably come to a support around 180 to 185. There's a double support over here. All right, so what happened to Google after that? Google actually went up. Then I think because of some when it announced its Q4 earning, probably not meet expectation, it came back down again. So now it's back to this. Can you see this blue uptrending support line? It's back to this about 180 blue horizontal support line also. So that is where also its 100-day moving average is also. Also, let's see whether Google can find support at this, I would say a triple support here. Can you see? There's a blue horizontal support, uptrending horizontal support, as well as the 100-day moving average support. All right, let's see whether you can find support at this triple support level over here. If you can, then probably you will go up and challenge this is historical high of about 210 US dollar per share. All right, so this for Google. Now let's take a look at Amazon. All right, so for Amazon, this was a chart I showed a month ago. I say it looks like there's a support over here, about 214. There's this blue horizontal support line as well as 50-day moving average. If this double support doesn't hold, we may see Amazon come down to this about $200 support, which is where its 100-day moving average is. Let's take a look what has happened since then. All right, so actually Amazon actually bounced off from this support line. Can you see? It bounced off from this support line. But unfortunately, it has weakened. It has broken the 50-day moving average last night. Also, let's see. But anyway, this support line has proven itself once already. So if Amazon will continue to correct, then this around 215, this blue horizontal support line seems like quite a strong support, and its 100-day moving average is also moving up. So there will be a double support over here. So with that, I think it's going to be quite a strong support with this double support. If it drop to this level, then probably Amazon may find support and go back and retest this 240 high again. All right. So this for Amazon. Now, of course, everyone when we talk about AI, everyone will know it's about NVIDIA. So this was a chart I showed about a month ago. I mentioned that NVIDIA has dropped to this upward trending support line, which is where its 100-day moving average is. I mentioned that if this double support doesn't hold, we may see NVIDIA drop lower to this support, which is where its 200-day moving average is also. So do notice at that point of the time, NVIDIA's RSI is around 45, around 50. So let's take a look what happened since then. NVIDIA, yes, it came down found support at this support zone, and it nearly went into oversold condition, about 30%, and since then it has bounced up very strongly. So I think early this month, the whole world, especially the tech stocks, at least AI related stocks, were stunned by the news of the DeepSeek, the China AI. But to me, ladies and gentlemen, I think I think it's overblown. All right, because be it even DeepSeek itself, they are also using NVIDIA chips. You understand? Even though it may not be using so high performance NVIDIA chip. So, but ladies and gentlemen, do take note, NVIDIA has taken up a majority of the GPU market. Even AMD has no fight with it, or Intel, they have no fight with NVIDIA. So to me, NVIDIA is, I can't say a full monopoly, is close to a monopoly in the GPU market. Also, it's no wonder it has such a strong bounce. Also, it has now faced resistance at this downtrending rate resistance line. Once it can take this out, I think it's going to challenge is 150 to 155 resistance. To me, my take is, anyway, just to let you all know, NVIDIA is going to have its Q4 earning announcement next week on the 26th of February. We see how is it like, but to me is it has a to me, NVIDIA has a MOAT. All right. As we go along into this last leg of this bull market, we probably will see take out this 155 and go higher. At least for me, I'm not worried about DeepSeek impacting NVIDIA too much. All right. So Meta. So if you ask me, among these 7 stocks, Meta is actually the best performing till now. Let me show you the chart that I showed you guys 1 month earlier. At that point, Meta is still in the uptrend. Alright, this was the support level or support line that I've shown. Alright, and the resistance was about 640. You can see over here this resistance. And since then, ladies and gentlemen, Meta has taken out 640. This is probably what we call a head and shoulder, not head and shoulder, sorry, double bottom chart pattern. After it broke out from a double bottom chart pattern, it goes up for 20 consecutive days until we have one black candle last night. Very impressive run up. Ladies and gentlemen, I can tell you among these 7, this Manoeuvre 7, I would say probably Meta has benefited from the most from this AI mega trend. That's why I explained for this. So probably it's going to take a break now. Take a break before it break the recent high here, the high here, and then go higher. Very beautiful. All right. So as of now, it seems that Meta is the best of the 7 Magnificent 7. Now the last one, and let's look at the monthly chart of Meta, is a historical high. That's why I say it's the most performing. But one thing we need to take note of is RSI is into the so-called the way into the overbought region. So I think it's right for it to take some break or to digest the gain so that it can go higher later on. All right. So now, but to me, the black horse is actually this company called Tesla. A lot of you guys probably thought that Tesla, just another EV company, but to me, Tesla is not just a car company. Why do I say that? For this, I have to use Amazon as an example. Ladies and gentlemen, remember how Amazon transformed itself from an online bookstore into a tech giant like right now? A big part of that transformation came when Amazon Web Service or AWS, because of AWS. AWS started when Amazon realized it has excess computing power in its data center. So instead of letting these computers sit idle, Amazon rented them out to other companies. And today, AWS generated over US 90 billion in annual revenue for Amazon. So ladies and gentlemen, Tesla wants to do the same thing like Amazon, but this time around with cars. Do you all happen to know that every Tesla has a powerful computer inside it? This computer helps to run Tesla's self-driving software. Anyway, just to let you guys know, this year, Tesla is going to test out the so-called the FSD, full self-driving, by mid of this year. All right, this is another exciting news about Tesla. All right, but anyway, come back to here. Most of the time, this computer aren't being fully used at full capacity, and Tesla want to change that. It has recently begun discussion of plan to rent out this spare computing power to AI companies. Think of it as something like Airbnb. Instead of renting out your spare room, you are renting out your car's brain. So as of now, Tesla has more than 4 million cars on the road as of now. Each one of the car has a computer more powerful than what most people have in their home. By 2030, we will have about 100 million Tesla car on the road. No, there will be more. This will be more computing power than any company in the world. This isn't about Tesla making more money. It's about Tesla owner making money also, because why? Every time their car's computer is being used, the owner could get a cut of their profit. So ladies and gentlemen, think about it. Someone bought a Tesla car. If their computer is being used, they have a cut. Then their friend who don't own probably a Tesla car, they still run on petroleum. They'll say, wow, I drive a Tesla car. I still can make money. Then probably more people will go and buy Tesla car. The revenue of Tesla will go up. Then what if the revenue go up, earning go up for Tesla? What will happen to its stock price? That's why I say we should look at Tesla more than just an EV car company. Of course, the FSD, the full self-driving, which is they are launching mid of this year, is exciting. But this is another thing that we should be excited about. And on top of this, there's Tesla has the Optimus robot, the humanoid robot. Now Tesla plan to deploy over 1,000 of these robots in its own factory this year. No, imagine 1,000 robots working along human being, handling complex manufacturing tasks. But that's just a testing ground. By 2026, Tesla plan to start selling their robot to other companies for about US 30,000 per robot. That's less than the annual salary of most factory workers. This is a very big implication, ladies and gentlemen. Because companies spend trillions per year on labor, no? Even a small slice of that market will be worth hundreds and billions of dollars. Please take note, Tesla isn't just building robots, it's building a workforce that never gets sick or tired, because it's human, right? And it's robot, right? It's creating robot that could reshape the global workforce, ladies and gentlemen. That's why to me, Tesla, among these 7 companies, to me is a black horse. It's probably going to do catch up. So this was the chart that I showed about a month ago for Tesla. I say, if Tesla continue to slide, it probably will find support at this support zone between about 300 and 365. Around 300 is also where is 100-day moving average is. So fast forward as of last night, we can see that Tesla has probably found support at is about 320. This blue horizontal support line is 100-day moving average, and its RSI has just touched its oversold territory. Can you see that? That's like what happened in Apple. Also, Intel RSI probably is oversold. Also, that's why it has a bounce. Let's see whether it can take out this red horizontal and red downtrending resistance line. If we can take it out together with its 50-day moving average, we should be looking at Tesla retesting its $480 high over here. All right, so this what I see in Tesla. So now, ladies and gentlemen, I also mentioned that for those of who are new, who you feel that you don't want to participate in each of these seven so-called Magnificent Seven stocks, there's actually an ETF that you can look at called the Round Hill Magnificent Seven ETF, or the ticker symbol is MAGS. All right. So this was that means when you buy into this MAGS, you are automatically owning the Magnificent Seven, the seven stock. So let's look at the chart of MAGS. All right. So about a month ago, I mentioned that it's probably going to find support at its 50-day moving average, as well as its the so-called the blue horizontal support line. Let's take a look what has happened then. All right. In fact, that was what happened. MAGS found support. It bounced off this 50-day moving average and this blue horizontal support line, and now it's probably challenging this red downtrending resistance line. Also, if Magnificent Seven, that means the Apple, Microsoft, Google, Amazon, Nvidia, Meta, Tesla were to rally, then MAGS will probably break above this red downtrending support resistance line and challenge this about 58 high. If this 58 high is resistance is taken out, we should see MAGS going higher. All right. So for those who are just want to buy one ETF that already has the 7 stocks inside, MAGS probably is an ETF that you can look at. All right. So apart from this, I think I also mentioned about this stock, which is another favorite after Nvidia. This stock called Palantir, PLTR. Ladies and gentlemen, its performance has been breathtaking. I cannot say good. I can only say it's breathtaking. Why do I say that? Because when I shared about PLTR last month, it was here. It's about 65.91. I say we probably will have a double support here of this blue horizontal support line and the 50-day moving average. If we continue to weaken, or there may be another support here at around 55, whereby its 100-day moving averages. Do take note, at that point of time, the RSI was here, already below 50, but not into oversold yet. Remember, it was about 65. Ladies and gentlemen, this is the latest. Fast forward to last night, it closed at 124. It's almost double already. Because on the 15th of January, when I shared this chart, During the last webinar, it was about 65. So last night was 124. So can you see it did bounce off the 50-day moving average? Takeout is about $83 high. Then this gap up was because it announced very good earning. Then after it continued to go higher. So this past 1 month, can you see it almost double, not really double, but almost there. Also, for those who attended my webinar last month, if you hear what I say, I mean, if you heard what I say, and you do research and you buy into this stock, then congratulations to you. All right, you have almost made double, I would say. But ladies and gentlemen, all right, do take note. In terms of RSI, it is very oversold. Also, for me, myself, I've slowly taken profit. I ride this trend as well for my trading position. I ride this trend. All right, so I've taken some of my profit uh, out. That means I sold about 50%. I'm letting the remaining 50% to see how high it can go. All right, so this is my way of managing my money. So whenever one of my position it has 100% return, I sell half to take back my capital. I let the remaining 50% to run risk free. Okay, so because I've taken back my capital, so I'm not worried, I'm less emotional. So why do I want to take some of my profit out? One thing is like what I mentioned, I already have almost 100% profit. Another thing is it looked a bit so-called oversold. Another thing is because this, ladies and gentlemen, PLTR, this longer term chart, since it was listed in 2020 during the COVID period around October. So it has formed a very big base, can you see? So the resistance here is about 45. The support here, the low here is about $6. Also, you take the difference, the depth, 65 minus 6, 39. So 39 times 2, probably you all can do some calculation yourself. So the distance of this depth is about 39. So you take 39 times 2, so that would be 78. 78 plus 45, we are looking at around 123, which is about here. Also, that's why for me, I feel, within a month to have this kind of return, not bad. So that's why I took up half of my profit. I let the remaining half run 50%. So for those of you guys who have a good run in PLTR, I congratulate you again. So I can tell you PLTR is one of the pure play for AI. All right, uh, so as we go on, I would say if you want to so-called benefit from AI, probably we should look at those company that's going to benefit from application or adoption of AI. For example, Palantir is one of it. That's why it has been doing very well. But like what I say, it's probably due for a break to digest this very beautiful handsome return. Due for a break, then probably consolidate a bit before you'll go before going higher of during this last leg of this bull run. All right. So this is PLTR. So now, uh, there's also I also mentioned about this Global X Artificial Intelligence and Technology ETF. The ticker symbol is AIQ. So if you want to buy into Palantir or this individual AI stock, you can buy into this ETF. Anyway, just to let you all know, whatever all this what Magnificent Seven AIQ Palantir is all listed into a US stock market. and is available in Philips platform. Also, you can trade all of them on Philip platform. And now Philip have this promotion of US 0.02%. All right, for when you trade US stock, so you can make use of this opportunity. Also, let's look at AIQ. If you don't want to buy individual AI stock, you can just buy ETF. So this was the chart I showed about a month ago for AIQ. It has come down. I say probably it may face it will face support at this support zone over here between 37 plus and about 38.20, which is also where its 100-day moving average is. Probably you'll find a support here and then maybe bounce and go higher. Let's fast forward 1 month later and see what happened. In fact, really, it bounced off this 100-day moving average and boom, 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 boom. From about 37, it went to 42.77. It closed at 42.77 as of last night. Also, ladies and gentlemen, do take note. Is our RSI is almost into the oversold condition, so do take note. And last night, if you look closely, it may, I'm just saying may, it may be a hanging man, which is a chart pattern in Japanese candlestick, hanging man. It may be a sign of reversal. And last night, the volume was very high. Also, probably AIQ is going to take a break also, all right, because it's almost going into an overbought condition already. All right. So whoever captured this, listen to this. It did bounce off the 100-day moving average. All right, about 5. I think it's about 10 plus 20% kind of return. All right, you have enjoyed this. Congratulations to you as well. All right. So for those who are new, probably AIQ is an ETF. If you see the potential of AI, probably we can let it take a break. So to digest this rise, then later on when it break the resistance again, we can re-enter again to ride on this AI trend. Okay, so now, so apart from AI, I think another sector that I think is going to benefit in this last leg of the US bull market is this group of stock called small caps. All right. So in 2024, we actually see substantial increase in the large cap share price, tech, especially tech. So I still expect tech stock to do well, continue to do well in 2025. But I think for the biggest gain should come from the small companies, especially those that's going to benefit the most from Trump administration and its deregulatory policies. Why do I say that? Let me just share with you. So we need to understand cycles market are cyclical. Big corporation, big caps like the Magnificent Seven, they tend to be multinational companies that derive a significant percentage of sale earnings from overseas operation. Small company or small cap comparison, they are more domestically oriented and less affected by weak overseas growth. And they are less likely to be hurt by the trade war that may result from Trump's planned tariff. You know, Trump is going around imposing tariff on a lot of countries, even on his allies like Mexico, Canada, even Europe. All right, so that's why I say probably smaller caps are going to benefit because they are more domestically oriented. All right. US stock market have already broadened since the presidential election last year. with small cap outperforming large cap, and I think this trend is going to continue in 2025. And very interestingly, because I do cycle analysis, I realize there's a fixed 24-year small cap versus big cap leadership cycle. I mean, if we stretch back to 1931, this green color line, that means small cap doing better than large cap. Then this red downtrend, that means large cap doing better than small cap. Green, red, green, red. So the difference, that means small cap tend to do well for 12 years during the green uptrend. Then for next 12 years, large cap will do better. Also, we are now here. So I think going forward, we should start to turn into the green line, whereby we should see small cap outperforming large cap. Let's look at the estimated earnings growth, large cap versus small cap. This green color column is actually for small cap, Russell 2000. Just to let you guys know, for those who are new to US stock market, Russell 2000 represents small cap. S&P 500 represent the larger cap. So can you see this for 2025 Q1, Q2, Q3, Q4 estimated? You can see for the first quarter, small cap earning growth is expected to be double of the large cap. And the second quarter is going to be our 4 time. Can you see that? When you go into the third quarter, probably, wow, it's about 4 or 5 times. Can you see that? So we all know ultimately, if a company continue to increase its earning, ultimately its share price will follow. You understand what I'm trying to say? So if this projection were to be were to turn out as it projected, that means the earning of the smaller cap probably will be better than larger cap. That's why I say probably on top of the AI, on top of the Magnificent Seven, probably we should also look at small caps. All right. And also because these two gentlemen will also help to ignite the so-called the bull run in the small cap. Why? Because like what I mentioned, Donald Trump, if you guys remember, in his first term, he did cut corporate tax. Remember, this time around he said he's going to cut corporate tax as well. Ladies and gentlemen, if you can't, I will share with you. During his first term, he cut the corporate tax from 35% to 21%. This time around, he's going to cut it to as low as 15%. When the corporate tax is cut, that means the companies, especially the locally, domestically oriented smaller cap companies, they are going to benefit from it. All right. So then, how are small cap going to benefit from Elon Musk? All right, because Elon Musk is now running Dodge, Department of Government Efficiency. He is going to cut away a lot of regulations, and regulation costs a lot of unnecessary spending. Also, all this is also going to benefit so-called small caps as well. All right, so then if that's the case, then how are we going to benefit from small caps? One of the easier way is to buy into an ETF. ETF that track the small cap. Remember, I mentioned Russell 2000 is a small cap. IWM or iShare Russell 2000 ETF is a ETF that track the small cap index performance. So this is a chart of IWM. Can you see? Now is probably going to approach this red horizontal Eastern line. or once he can take out this about 230 resistance line, it's probably going to hit higher to challenge this probably 245, the 245 high over here. All right, so uh, it did have a run here already after Donald Trump so-called won the, this was last year November, after he won the election, or he has a run up. All right, so if we can break this high, like what I say, if we can break this resistance here, it's probably going to challenge this high. Also, for those who are interested to participate in a small cap, maybe IWM is an ETF that you can look at. Let's look at the history of IWM from 2016 until right now. Remember Donald Trump first term, can you see it was from 17, 18, 19, 20 until 21. Then Biden took over as the US president, right? Can you see 2017? Remember earlier I mentioned Donald Trump cut corporate tax from 35% to 21%. It fueled this, is one of the reasons that fueled this rally. This time around, I think the same thing probably is going to happen again because Donald Trump is going to cut corporate tax even further to as low as 15%. Also, with all this, probably small cap stocks is something that you guys can look at. And the easiest way probably is to look at IWM to ride on this bull run in a small cap. All right, another theme that I think that we can all look at will be this Muskonomy, Elon Musk, who own Tesla. I mentioned earlier. That's why I say we probably should look at Tesla more than a car company. To me, we should look at it as more as an AI company that's going to full self driving as well as robot and its XAI. Of course, he also own X, which is a former Twitter, and SpaceX. So, ladies and gentlemen, so this guy is, I would say, I mean, he's the richest man right now in this whole world, about 400 billion US dollar, his net worth. All right, so and whatever he touch, he seems to have a golden finger. Whatever he touch seems to turn into gold. So probably we should look at some of the company that he owned to see how we can benefit from it. Tesla, I already mentioned, but ladies and gentlemen, let's look at the number of federal contract Tesla and its SpaceX company has. They have so much of so-called of the contract of at least 15.4 US billion dollar of government contract. And now, ladies and gentlemen, with Elon Musk, Donald Trump's first buddy, I think things is going to turn out to be even more easier for him to get even more contract for Tesla, for SpaceX, or even for his other companies. Also, I've spoken about Tesla earlier, right, ladies and gentlemen. Now I'm going to talk a bit more about SpaceX. But ladies and gentlemen, SpaceX is still a private company. It's not listed yet. But probably from what I heard, probably SpaceX is going to be listed, all right, in maybe middle of this year, and probably is going to be a so-called the biggest IPO this year. Ladies and gentlemen, even though it's not listed yet, but there's an ETF called XOVR that own about 10% of SpaceX. Can you see? I mean, apart from SpaceX, it has Alphabet, Meta, Nvidia, all this. But because SpaceX is not listed yet, So you want to participate in SpaceX as of now, this is one of the way through XOVR. So this is a chart of XOVR. The full name is actually ER Shares Entrepreneur 30 ETF. It's listed in US stock market. So can you see it's now knocking on this red horizontal resistance line. Or if we break above this resistance line, I think it's going to hit higher from here. Especially later on when the so-called SpaceX get listed, probably this XOVR is going to hit higher. So this is one way, apart from Tesla, we can participate in Elon Musk's company. All right. So one more. So ladies and gentlemen, apart from Tesla, apart from SpaceX, Elon Musk also has a so-called a company called XAI. It has a ChatGPT, something like ChatGPT is called Crop Tree, or has just recently, I think 1 or 2 days ago, officially been released. Is 10 times more training than Crop 2, the earlier version. Now it's Crop Tree. XAI say Crop Tree outperformed ChatGPT latest -4.0 and other ChatGPT. So XAI even launched a Crop Tree intelligent research engine called Deep Search. Very, some similarity to DeepSeek, right? So they come out with a search engine called Deep Search. So ladies and gentlemen, I think XAI is something that we can look at as well. But XAI is also not listed yet. But don't worry, there's a backdoor play. This company called Dell Technology. Why do I say that? Actually, probably you all thought that Dell is just another, computer company, all these things. But ladies and gentlemen, actually Dell has already positioned itself as a go-to company for AI infrastructure. Recently, this is a project Elon Musk called Project Columnus. It's a giant supercomputer that Elon Musk is building for his new AI company XAI. This is a massive collaboration between Elon Musk, NVIDIA, and Dell. So basically, NVIDIA is supplying Elon Musk with hundreds and billions of AI chips to build the world's smartest AI machine. And Dell supplies a key piece of technology that let all of these AI chips work together in a single synchronized unit like this. All right. So ladies and gentlemen, so each of these server rack contain thousands and thousands of NVIDIA chips, and Dell is supplying thousands of these racks at Project Columnus. So far, Dell has helped Elon Musk install over 100,000 chips at the project, and Elon Musk says he's going to crank it up to 1 million. So I can tell you, most people still haven't figured out that Dell is at the center of the biggest AI story of 2025. I just want to show you guys this. This was just announced. I got this last night. Can you see? Dell Technology is reportedly close to securing a US $5 billion deal to provide AI server to Elon Musk XAI. It involves server with NVIDIA chips, boosting Dell. And because of this last night, actually Dell's stock price went up by 5.6%. It highlights the growing demand for AI computing hardware, with Dell expected to ship over $10 billion in AI server last fiscal year. This deal solidified Dell's position as a leading AI server provider in a competitive market that includes SMSCI and HPE, Hewlett Packard and Enterprise. So this is a chart of Dell. Also, after almost at its oversold now, it has rebounded quite strongly. Last night went up about 5.6%. All right, so now if Dow can take out this resistance around 125, then it's probably going to challenge 147. Also, Dow, I would say, is if you want to participate in Elon Musk's XAI project, which is not listed yet, Dow may be the so-called the backdoor play for it. All right. So, ladies and gentlemen, so I've just shared with you guys some of the ways that we can participate in Elon Musk's company, apart from Tesla, is through uh, example XOVR for SpaceX and Dell for XAI. All right. So now, uh, apart from AI, apart from small cap, apart from Elon Musk, I think another thing I want to share is this asset class called Gold. This was a chart I showed last month. All right, I say gold is probably finding support at this blue uptrending support line. All right, so it seems that the 100-day moving average is finding support around it. Anyway, this is GLD. GLD is if you don't want to buy physical gold, another way is to buy into GLD, which is SPDR Gold Share. It's an ETF that track gold price. So 1 month later, ladies and gentlemen, this is gold GLD as of last night. It has, can you see, it has gone up, taken out this high. You see, it has rebounded, taken out this high, and go much higher from here. So, ladies and gentlemen, my take is I think gold is probably going to find some tough resistance at the 3,000 level. 3,000 probably is going to be a hard nut to crack. Because 3,000 is a round full number. Normally 1,000, 2,000, 3,000, they are hard numbers, strong resistance to crack. So uh, as of now, gold price about 2,957. We are close to 3,000 really. So for those who have managed to ride this trend up, like for me, I ride this trend up. I've slowly starting to take profit because one thing I noticed is the RSI for GLD has gone into the overbought region. Another thing, like what I mentioned, gold price probably is going to face some tough resistance at around 3,000. That's why I'm slowly hesitating to take out my profit. All right, so that's what I've been doing. All right, so ladies and gentlemen, I just want to say this. Uh, I think all of us should have some goal in our portfolio, be it for investment or be it for trading. For example, I've traded in GLD. My investment in gold is I hold gold since the 2008 global financial crisis for investment. Also, going forward, I think once gold can take out 3,000, my personal take is I think it's going to go beyond 3,000. But in short to intermediate term, probably it's a bit overbought lah. So it may take a break around 3,000. All right, so before to digest the so-called the recent rally. But one thing need to take note is because I do think that the geopolitical tension is going to pick up. So I think a good hedge is through gold. So that's why I say everyone should try to have some gold in your portfolio. All right. So I think uh, because I don't know when I'm going to see you guys again, so I think I better share a bit about this. Prepare for a bear market by doing short selling, because I I want to emphasize this again. I don't think the bull market is over yet. We probably will have some correction in March, April before this bull market continue for S&P maybe to go to as high as 6,500 probably by maybe Q3 of this year. Then probably it will be topping. Then we will start to go into a bear market. Maybe in the last quarter and then into 2026. So I need to make myself very clear. We are not going to a bear market yet. Or we're probably going to have a correction. Then after that, into a last leg of the bull market. But when we go into a bear market, uh, one of the way to participate to make money in a bear market is by doing short selling. All right. So one of the way is to short sell the US indexes. Just to let you all know, I've tabulated the past so-called bear market for S&P 500 since 1929 until now. This is the average with no recession, about 11 of them. Recession is about 16 of them. So when there's a recession, S&P actually drop on average about 42%. When there's no recession, it drop about 28%. So if average out, the drop is about 35%. So when S&P drop, one of the way when you go into a bear market is to buy into all these inverse ETFs, whereby there's no leverage. That means if you want to short down zone, you can use this pro share short down 30 ETF. That means you buy into this inverse ETF. That means you buy into DOG, you are actually shorting down zone. Can you see the word short? When you buy into SH, which is pro share short S&P 500, that means you buy into SH, you are actually shorting S&P 500. If you want to short QQQ, that means Nasdaq 100, you can buy into PSQ, and later on, if you want to short Russell 2000, you can buy RWM. All these are symbol. All this is available in the US stock market. But like what I say, now is not the time yet. Probably the later part of the year or even 2026. That is the time whereby when the US stock market start to go into a bear market, we can buy into all these inverse ETF to do short selling. I want to tell you all upfront all this because I don't know whether Philip is going to engage me to share you guys towards the end of this year. If not, at least you all will know that, hey, maybe when the bear market come, you can all use, for example, all this ETF to do short selling. So last two chart I'm going to show you guys. This is a chart of S&P 500, the latest. So when you buy into S&P 5, when you buy into, let's say SH, when it go into a bear market, this is the chart of SH. Also, SH means pro share short S&P 500. That means when you buy into SH, when S&P 500 drop 1%, SH will actually go up 1%. I hope you understand what I'm trying to say. So when you buy into SH, it's actually doing short selling for you. Okay, so let's take for example, I'm just saying example. If this S&P, if it start to drop, if you buy into SH, which is the pro share short S&P 500, it will go up. You understand what I'm saying? But at this point of time, I don't think we should participate in all this yet, but probably towards the second half or towards the end of the year. When the bear market start, then that is probably a better time to look at all this inverse ETF. All right. So I think with that, so I hope you all have learned something tonight. I hope I have not wasted 1.5 hours of your time. So if you add some value, so if you want to know more about me, you can take a screenshot of this QR code. You can find my information. You can like me on my social media, all this. All right. So with that, I think I'll pass the time back to Brian, and we can do some Q&A before we end tonight's session. Also, back to you, Brian.
All right, thank you, Derek. All right, let me pass the presenter back to me, and then we'll get straight into the Q&A section.
Okay.
All right, cool. So, if you have any other questions that you want Derek to answer, you can leave them right here. If you're on mobile, it should be at the top right-hand corner of your mobile screen of the app. There's a text box icon with a question mark inside. That's where you can, leave your questions and type them out, and then we'll read them out to Derek. We have
Yeah.
one at the moment, which is Mac's portfolio has more than 50% treasury bills, meaning less than 50% is invested in Mag 7 stocks,
No, no.
right?
Whose portfolio? Sorry.
Uh, Mag's portfolio, MAGS portfolio.
Oh, MAGS. Okay.
Yep. It has also invests in swap like MetaSwap, Alphabet Swap, etc. What is swap and what is the risk or the benefit? Yeah,
That
that's
is
the
a
question.
very good question. Let me check out. The question is MAGS ETF has the so-called. Can you repeat the question again, Brian?
Yep, sure. Uh, the Mag's portfolio has more than
Yeah.
50% treasury bills, meaning less than 50% is invested in Mag 7 stocks, right?
Yes. Correct.
It has
Correct.
also invested in swap like MetaSwap, Alphabet Swap, etc. What is swap and what is the risk or benefit?
Is that swap? Oh, yeah. There's a Tesla swap. Ladies and gentlemen, for me, I do not have an answer for this. I don't want to, mislead you. I do not know the swap of this. I only know that they own all this, uh, the seven, the Apple, the Microsoft, all this stock. Swap, probably we can do some research to find out what is it. But if you are not comfortable about all this Tesla swap, or then you can so-called don't participate in MAC and buy the individual stock itself. Okay, if you are not comfortable about Tesla swap, if you want to find out more about what is all this swap, probably you can go Google for it. At this point of time, I do not have answer for that. All right, Ken.
Right. All right, cool. Thanks, Derek. Right, we have one more question, which is what is the highest S&P 500 peak based on your prediction before it drops into the bear market? Do you think the bear market in 2025 will start in quarter 3 or quarter 4?
Actually, S&P 500 has already hit my so-called minimum projection. Uh, which is about 6150, which I showed you all earlier by taking the depth of the recent of 4818, the depth of the cup handle. So it already hit 6150, my minimum projection. So earlier I also shared is if we use a Fibonacci extension of 23.6, we are looking at 6005. So for me, I'm looking at 6005. All right. So if you base on the close of not Nasdaq, S&P 500 last year, which is about 5,800, you give it another, let's say 20%, is about 7,000. So you remember earlier I mentioned I don't think we can go beyond. I don't think we have a performance like 2023, 2024. So I think we probably will have a performance less stellar than last 2 year, probably less than 20%, maybe 15%. So if you ask me, I'm looking at probably 6,005 or at least less than 7,000. But it's going to be very, very volatile. Like what I mentioned, it's going to be very volatile. So like just 1 month, we can have a deep seek correction. A lot of so-called, especially AI stock, they get down. Wow. All right, because of deep seek. Then earlier it was because Donald Trump go and impose a tariff on Canada, on Mexico, on China, then the market corrected. So we got to accept that with Donald Trump, I think is going to be very volatile with his policies, and we got to accept that volatility is here to stay. Also, so back to the question is probably I'm looking at 6,005. I mean, if we go much higher than 6,005, I don't think you'll go beyond 7,000. So the based on cycle analysis, if you ask me the high point, probably Q3. High point means the highest for this year. Like what I mentioned earlier, topping is a process. It doesn't mean it reach a high rate straight away it will crash. It's not how it works. So probably after reach a high in Q3, then you will hover probably for 1 quarter, or we may not have a year-end rally this year. Then that should be the end of the bull market. Then we will start to go into a bear market into 2026 and 2027. So that's my take. All right.
All right, thanks, Derek. All
Any
right, do you have any
other
other
question?
questions? All right, so if there are no further questions, I think that's it for the Q&A section. Thank you, Derek, for your time. I'll just do the closing right now. So once again, if you are interested in using the knowledge and insights that Derek has shared with you in his section, you can open an account with us for stocks, futures, and CFDs all in one platform. And you can get exposure to these markets and get profits. Okay, so once again, if you are interested in any, or if you have any other questions after the event, you can contact us here. These are our social media handles. We are on Facebook, YouTube, LinkedIn, Telegram, and also TikTok. This is our Instagram handle, as well as our official corporate website, flip.com.my. All the information, you can find them on there. All right, we also do have two free to join Telegram channels. The first one is for stocks, and the second one is for futures and CFDs. All of them have updates and recaps in their respective asset classes.
Oh, Brian, Philip offers CFD as well, is it?
Yes, we do offer
Oh,
local Bursa CFDs as well as foreign stocks share CFDs.
okay. Since Brian mentioned about this, another way that we can do short selling is to use CFD to do short selling. That's another
Hmm.
way lah. But that will be later part lah, later part. If Philip were to engage me to come back and share again, then probably next time I can talk more about that. All right?
Yeah. All right. Thanks, Derek. Yeah. Anyway, so this
Yeah.
is our contact list for all of the different branches throughout Malaysia. You can drop them an email or you can drop them a call. We are on duty Monday to Friday, 9 a.m. to 6 p.m. once again. All right, so thank you all for attending this webinar. And also thank you to Derek for your time. I'm sure the
Thank
audience
you very
found
much.
it insightful. And I'll see you all in the next one. Peace.
All right. Take care. Bye bye.